Hello, everyone. Welcome to this session brought to you by M Equities in collaboration with Bursa Malaysia and managed by Wealthford. Today, we will be doing this topic that is titled Structured Warrants, Power of Leveraging. Okay, so my name is Shen Chu. I'm the moderator for this webinar. Now, structured warrants is a very powerful tool to amplify our returns and help us to minimize the cost of our capital. And in this 1 hour session, we will be looking at, why we should trade warrants and how leveraging can help us to optimize the opportunity in the market. And how do we identify a structured warrants? And then we also study what are the factors that will affect the warrant prices. So today we are going to learn about the strategies when it comes to trading structured warrants. So this session we will have two speakers. So before we talk about structured warrants, we would like to invite the first speaker, who is Jessie Ng, to share about what M Equities have in store for you as broker partners. Without further ado, let me just invite Miss Jessie Ng.
Hi, good evening, everyone. I'm JC. I'm a leader from M Investment Bank, and welcome to our tonight webinar. I would like to have a quick introduction about our company product. Okay, let's just start right now. Okay, this is the award that our company got for the last year. And then basically our company provide a indirect cash out fund and collateralized trading account and foreign investing service account. And we do provide financing also, for example, discretionary financing and share margin financing. And let's get into more details about these two types of account. Indirect cash out fund. This our progress is 0.05% or minimum at ringgit. This our progress can be considered as one of the lowest brokerage charges in this market, and you are entitled to get a trading limit of 99% of cash. Besides that, we also have you can earn the 1.65% per annum interest in your trust account. And then we go to the collateralized account. For this account, we provide like 0.4% for the brokerage, online brokerage, for the value trade below 100K, and 0.2% for the value trade above 100K or minimum 28 ringgit. And you may negotiate with your dealer if you have a high volume of trade. And then if you put in press in the cash into this account, then you are entitled to get 3 times of trading limit. Besides that, if you press in the share, then our company will give you the cap value, the maximum value of 2 times the trading limit. And then our settlement will be on T2. Then beside that, we also will get the 2.1% of per annum the interest in your trust account. Okay, we also cover foreign investing service for few of country, for example, Singapore, US, Hong Kong, and so on. And then we also launching some of the the campaign or the program. For example, this is our M Elite membership program. The member in this program is entitled to get the benefit of market depth, exclusive pass into our in-house event and seminar and news. This is our trade and be rewarded campaign. Client is entitled to get the Touch and Go e-wallet or Aeon or Parcel voucher. Okay, this is our one of the quite attractive campaign. Trade with your body. For every client who refer their friend and family and then open the share trading account, they are entitled to get 10 ringgit for each account successfully account opening. Okay, we also provide some of online workshop and intermediate advanced bootcamp. Okay, this is our sales leader contact number. If you have any further inquiry, you may go to our contact number, and then yeah, that is from my side, my presentation. So I will pass my next session speaker, Suen. Thank you.
All right, thank you so much, Jessie. So of course, if you haven't had a trading account with M Equities and you're considering one, you may reach out to one of our dealers representative to open a trading account. All right. So next up, I would like to invite Ms. Ng Xuan Ting to do the presentation for structured warrants, power of leveraging. So Ms. Ng Xuan Ting is from the Group Treasury and Markets of M Bank Group. So hi, Ms. Ng.
Good evening.
Good to have you here.
Thank you. Right. Okay, good evening. Thank you for being with us at this hour because this is 8 o'clock. I hope you guys had your dinner, and I heard KL is having a jam. I don't know why, but okay. Today we aim to cover structured warrants, the power of leveraging. Okay. Agenda today, we have a long list to go through. Some of them are very quick and easy. Basics of structured warrants. Why should you trade structured warrants? How to identify the right structured warrants? And what are the key factors that actually affect the structured warrant price? And price metrics, I think one of the interesting topics that everyone would like to know, and how sensitivity works. Last but not least, we have to understand what are the risks for trading structured warrants. So let's begin. Basic of structured warrants. What are structured warrants? Formally speaking, right, structured warrants are the right, but not the obligations to buy or sell the asset, which can be a share, at an agreed price, exercise price for in terms of structured warrants, on a future date, which is the expiry date for structured warrants. So you can imagine it as the rights issue. Okay, it gives you the rights to subscribe shares at a fixed price, and these rights allow you to buy the share at a lower price. When the rights are traded, it's traded at a very small minimal value and for a short tenure, so a short period of time, probably about 1 week, 2 weeks. But comparably, right, structured warrants actually have longer tenure. It could be a minimum of 6 months up to 1 year. I think typically it's up to 1 year. We can do up to 2 years warrants. So if you are bullish in the market, right, you will need to buy call warrants. So this is when you expect the share price to go up, then you buy call warrants. And for call warrants, there's a letter C in between, SOP, CO, example. Okay. Then if you are bearish in the market, you need to buy put warrants. Start with H. So there is Hang Seng Index HE5 in the market for put warrants, for example. And then for the basics, we have FFBCG as an example. C is a call warrant, so this warrant is actually a call warrant, and on Farm Fresh Berhad, right? It was listed on 18 April. Expiry day is January 10, about 9 months tenure. And then it has an exercise price of 1.6. Exercise ratio is 4:1. Share price currently we assume is at 1.64. The warrant price traded at the market based on the share price of 1.64 was at 3 cents. So warrant price usually divided by two values. One is the intrinsic value, another one is the time value. Intrinsic value is the difference between the share price and the exercise price divided by the ratio. So the intrinsic value for this warrant is 1 cent. Okay, if the warrant expired today, the value that you will receive in cash is 1 cent per warrant if the warrant is expiring today. Okay, the second value that we are looking at is the time value. Time value is actually the difference between the warrant price, 3 cents, minus the intrinsic value, which is 2 cents. The time value of 2 cents is what you are paying as a premium for the warrant. And this time value will diminish and become zero when it's getting close to the maturity or expiry. Okay, so time value eventually will be zero. What you will get at maturity is intrinsic value. Why you should trade structured warrants? There are shares, you can trade shares, right? Why you should trade structured warrants? The topic today is power of leveraging. This is why. Leverage, main reasons is because of leverage. You want to gain exposure to an underlying at a fraction of the price of the underlying. So we take back our FFB as an example. The share price is at 1.63. You bought 10,000 units of shares, then that's total value of 16,300 ringgit, right? Now, you can actually buy call warrants on FFB, right? The call warrant price is at 5 cents now. The effective gearing for this warrant is 5.54. To get the same exposure, you can buy 58,800 warrants, which you spend 2,900, right? Okay, what do we mean by leverage here? Let's say share price goes up. Share price actually goes up to 1.68. FFBCG call warrants go up by 0.5 cent, right? Well, you wanted to sell your shares, you can also choose to sell your warrants. For shares, you manage to profit 500 ringgit. For call warrants, you manage to profit 294. Now, if you do the math, actually which one that you make more money? Okay, this is the leverage power. For share, you spend about how much? 16,000, you earn 3%. But for warrant, you spend about, I think, less than 3,000, you actually earn 10%. Right? So this is the leverage that we are talking about here. So there are also other reasons why you want to trade structured warrants. One of them is free up capital. As our example earlier on, right? Warrant actually lets you have a bigger exposure with a smaller amount of capital. So buying structured warrants instead of the underlying share, at the same time, you're still maintaining the equivalent level of exposures. Next, diversification, right? You are using less capital. You have more freed up capital in this case to diversify into other stocks using warrants, right? There are warrants issued on shares, local shares, foreign shares, ETF, local indices, even foreign indices. So you are able to actually diversify it. Don't put all eggs into one basket, which you buy, spend all the money on one underlying shares, right? Then fourth is lower transaction cost. Because nominal amount that you spend just now is lower, you also pay a lower transaction cost, right? And then stamp duty for structured warrants is definitely lower than the trading the underlying shares. And fifth is constant liquidity. When you trade warrants, right, there is always a market maker behind the warrants or the issuer himself, right? So they're always there to provide you a continuous bid and ask with sizable quantity in the market. That means you buy and sell, market maker is always there. So these are the reasons why you should trade structured warrants. And now, how to identify the right warrants? I think one of the main topics to cover. First, expectation on the underlying. Similar to trading shares in the markets, right? You would actually need to understand and analyze the underlying. Ask yourself, what is your view on the underlying? Are you bullish? Are you bearish? Right? If you are bearish, for example, Hang Seng Index, sometimes you might not want to buy Hang Seng futures directly, right? But to gain that exposure, you could consider a Hang Seng Index warrants in this case. So if you are bearish on Hang Seng Index, you expect Hang Seng futures or Hang Seng Index to fall, right? Then you would definitely want to buy put warrants on Hang Seng Index, right? That's your expectation. Then you go for the underlying or the warrants itself. Then next, you need to set your profit taking price or cut loss point. Okay, similar to trading shares, you must be able to set a target price that you want to get out or take profit in the way. Then next thing is your investment horizons and the time value of warrants. As we went through the slide earlier on, right, time value is something that it will become zero at expiry. So this graph, right, allow you to see that value of warrants will be lost for 2/3 when it comes to closer to maturity. That is like 2 months, less than 2 months, right? Then you only left so little time. We always advise our client not to trade warrants that have more than not to trade warrants that have less than 2 months maturity. That means the 10-year. Next is know your risk appetite. Okay, use moneyness to gauge the riskiness of the warrants. So similarly, if you go back to FFT core warrants, the exercise price is 1.6. Share price is 1.6 now, means the warrant is at the money, right? If share price go above 1.6, the warrant is in the money. If the share price actually is below 1.6, the warrant is out of the money. When it's in the money, you have intrinsic value. That's what we learned just now, right? Anything beyond your exercise price, you have an intrinsic value. Anything below your exercise price is out of the money and there is zero intrinsic value. So what is your risk appetite? Are you a risk taker? If you're a risk taker, you will consider an out of the money warrant because it's cheaper and you have expectation on the underlying probability that you expect the shares to go up way above the 1.6. That means it will turn green instead of getting into the red zone area, right? So if that's your expectation, yes, then you can go for the out of the money warrant, right? So it depends on how risky is the warrant and your risk appetite. Then another way to measure this is effective gearing. Effective gearing is where the leverage will come, right? If the effective gearing in this case is 5 times, means if mother price goes up by 1%, the fair value of the warrant price will actually go up by 5%. Okay, vice versa. if the share price, mother price actually dropped by 1%, the warrant price will be heading down for 5%. So this is the effect of leverage as well. At the same time, you do need to compare implied war between the warrants. Warrants that have a lower implied volatility is cheap, and warrants with the higher implied volatility is considered expensive or more expensive compared to the World War I, right? So you need to think of it as when you buy the warrants, right? You don't want to overspend. You want to aim for the cheaper one, with being all else equal, right? And this information usually can be obtained online on the issuer website or Bloomberg itself. Then in general, right, the lower the war, the lesser the time value, then the lesser the time decay. So here is a list that we try to summarize. I picked like the closer tenure, like in terms of expiry. So from 18 July, and given that they are all expiring in January and December, you can see the implied war range between 37 to 48.9, the highest. Okay, then you can see which one is considered at the low range and high range, right? So this is how we actually compare. Okay, then next one is last one. This one is last one for the issuer, right? You want to pick the correct issuer, the market maker, who can actually give you the tight spread and sizable quantity when you want to trade. And the market maker, right, have to be consistent and does not adjust the time value drastically before maturity. I believe certain investor might have seen it before, that there is an adjusted during the day, possibly there's an adjusted time value drastically, so the price will move a lot. Then when you go to the market, right, how do you know that this is a good market maker? There's a few ways to identify as well. So first thing is, it depends on the quantity quoted. The higher the quantity the market maker can give you, right, or bid and ask, okay, both sides, then that also means that they can absorb your order better. Usually, if the mother shares is very liquid, then you would tend to see the bigger size of quantity being put up, okay? The order refill rate has to be fast, okay? So that you, as an investor, can exit and enter without worrying the refill rate that is not adequate, right? Then third thing is tight spread. You would want to have a tight spread from the market maker, because the smaller the spread, right, the less spread cost that you are paying to the market maker, then less slippage when you trade. Then of course, a market maker that can show you price metrics is also preferable. Price metrics will actually give you the comfort of the commit bid price where the investor can exit, and also give the investor a better expectations where the warrant will be priced based on the underlying share price. Okay, we will go through that a little bit in a while. So in summary, right, you need to have expectations on the underlying. Choose call or put warrants linked to the underlying that you have picked, right? You want to buy a call or you want to buy a put. Then, what is your investment horizon? We would think that anything more than 2 months buffer, that would be great, right? Before the maturity. We do understand that there are certain warrants could be very, very attractive or very, very interesting when it comes to the 2-month period. You might have a expectation on the underlying saying that, oh, I think next week the share price goes up. I have a bullish view on the shares. You can buy it now. You can definitely buy it now. if it has less than 2 months, right, maturity, because you have an upside on that. You have foreseen the upside or your expectation on the underlying itself. We are just advising, saying that if you can avoid, then it will be great, because the time value effect is going to be in that 2 months period, right? And whatever the intrinsic value, that would be what you will receive at maturity. Then third is know your risk appetite. We suggest to choose warrants that is at least at the money or in the money. Depends on your risk appetite as well. Then effective gearing that you are comfortable with, because the effective gearing effect is on both up and down. They have the same effect, okay, the multiple times effect. Then number 4 and number 5 is actually the issuer. The issuer that gave you a consistent bid and offer price, and the issuer that gave you the lower kind of implied wall. Then you should go with that, okay? Now, we come to the slide, price metrics and sensitivities. So we would also share with you also what we have currently. We have a static price metrics that we actually update and posted, uploaded in our mBank Warrant website. The price matrix itself is a PDF. You can download it, and then we give a huge range of price level, about more than 20 up and 20 down, 20 ticks down and 20 ticks up from the day before, the previous day closing. And it gives you the main parameters such as effective gearing, effective price, the exercise ratio, exercise price and exercise ratio, then expiry date. So these are the important items that just now we went through, right? You can have it here. I mean, you will already have it on the PDF itself. So the price metric is good for all the structured warrants that are issued by the mBank. Then you can see our underlying bid price versus the warrant bid price. So I'll show you how to read this now. So basically, you can see that I'm not sure if you guys can see my mouse actually, but you can see that this area, the gray area, 3.45 for AB, MB call warrants 9, right? 3.45, our bid price is at 2 cents. If the share price is traded at 3.45 now, we are buying back at 2 cents, right? And if you look at Aeon C17, this is at the money. Exercise price 1.4, and then the Aeon share price, if it's at 1.4, is at the money. So it's 5.5 cents now. We are buying back at 5.5 cents. The effective gearing for this is 3 times, 3.6. That means about 3 times. Okay. Now we move on to Anju CX. We are not promoting any of these warrants. We are just going through as an example and illustration. Effective gearing is not applicable. Why? Because the warrants is already way out of the money. Share price yesterday closing was at 1.15, right? Then our exercise price is at 2.35, plus the expiry date is 22nd August. That means it's only left like a few weeks down the road, then it's expired already. So there is no bid price here because there is no value to this warrant based on the current share price level, right? Next one is Astro C35. Effective gearing is 3.5. Exercise price is 0.99. Okay, 0.99. The current price is at 885. So we are buying back at 1 cent. Okay, that is more, you can see the share price is actually increasing, right? I only managed to capture the first half of price. If you look at the website, you actually have the upper tick to show you where will the share price be as well. Axiata C79. The effective gearing is 5.4. Okay. Exercise price is 3.1. This is also an out of the money warrant, and we are buying back at 4 cents for share price of 2.83. Okay, so it depends on how riskiness you are, right? You want to hold or you want to wait, because the maturity is actually 10 March 2023 in this case. Then we also have Bursa C61. The exercise price is 6.6, and this one is the leverage level is very high. You know why, right? Effective gearing is 8 times. Okay, it's going to expire in October. It has an exercise ratio of 11. Exercise price is 6.6. So currently, based on the market price, which is yesterday closing, 6.5, we are buying back at 2.5 cents. So this is how you read. This actually allows you to gauge, right, when you want to exit from the warrants that you are holding. Okay. At the same time, right, price metrics actually allow you to see how responsive the warrant price is to the underlying share price. So we take 2 warrants, for example, for illustration purpose. One is SOPCI, one is SOPCO. This data was based on 18 July, and share price that time was at 2.58. So with the share price of 2.58, right, CI exercise price is 2.4. Exercise price for CO is 2.8667. So CI is in the money compared to CO in this case, right? Now, CI also have a lower exercise ratio comparable to CO. Just 4 versus 6.667. Then next thing is, right, we want to see what are the movements, how sensitive it is. Sensitivity is 3 ticks versus 7 ticks. What do we mean by here? So you can see the cursors. It said that when SOP share price is at 2.49 from the first level, 2.49, the warrant price that we buy back is 7 cents, right? You continue to beat this warrant price until 2.52. That's the flipping point. It will actually move to 7.5 cents. So 3 ticks, it will move. The warrant price will actually move. So this is how sensitive is the warrant. Comparably, right, if you look at SOPCO, 2.49, actually 2.49 is not a good example. 2.52 at 5.5 cents, you will need to wait for 7 ticks in order to have another half a cent jump. So this is less sensitive compared to CI. This one will require about 7 ticks for half a cent jump, right? Then why? Because the further out of the money tend to be less sensitive. Okay, so CO is out of the money, then it's less sensitive. Based on the price metrics, right, you actually can set a target price on the underlying share price first. Then, based on the underlying share price, you set your target price for the warrant. What is the level that you want to exit, right? Because if the share price is at 2.52, 7.5 cents, or you want to wait until 2.55, 8 cents. Because in between, you can't be bothered in a way, because in between is the same price as per 2.52, right? The share price goes up to 2.53 or 2.54 doesn't matter to you until it goes to 2.55. So are you willing to wait until 2.55 or even 2.58? Or what is your target price? Your target price is 2.58. Then you know that 2.58, your exit price is at 8.5 cents, right? Similarly for the SOP one, which level that you are willing to wait for, right? So this is how we actually read our price metrics. Our price metrics is static, okay? It will be good for the whole day. So if you download it, it's good for the whole day. If the price range the share price actually exceeds the price range that we have in the price metric, you can always call and email us. We will send you the price range that fit into the current market price. Okay. Now, there are always some key factors affecting the warrant price. Most people understand that share price affects the warrant price, but it's not only share price, okay? So we need to understand that it's not only share price. First two factors is definitely the share price. If the share price goes up, your call warrant goes up. Vice versa, your put warrant price will go down, right? If the share price decrease, your call price will decrease, while your put price will actually goes up. Now, time to maturity. That's the time value decreasing, right? So when the time value decreasing, both your call warrant and put warrant price will decrease. This is why up to a point that when you close to maturity, your time value is 0. Okay, then it will decrease. What you left is intrinsic value. Okay. Then implied wall. If the implied wall increase, right? Call price increase, put price also increase. So it depends you are at the buy side or you are at the sell side, right? How it affects you in a way. Then interest rate increase. Interest rate increase, the value of call warrants increase. But for put warrants, it will actually decrease. Okay. For dividend, if dividend increase, call warrant value will decrease, while put warrant value will increase. Last but not least, structured warrant is a leverage product. You need to understand what are the risks involved, definitely. Any potential losses are amplified in the same way of the potential gain. Okay. Then limited lifespan. Time value of warrants will diminish, right? Because of the essentially, right, when it gets to the closer to the maturity. So we always suggest you to monitor your position regularly. Structured warrant is not something that you can buy and hold forever. It has an expiry date. And we do understand that sometimes people will mistake structured warrant compared to the company warrants. They thought that they can convert into mother shares. Structured warrants currently issued in the market, they are, I would believe, 100% of them are cash settled now. So at maturity, it's either we settle in cash or the intrinsic value, or there's no value at all. And it will just, you don't have to do anything, it will just be settled with a cash or no, nothing. Okay, so you do have to monitor your position regularly. This is not something that you should hold until it expires, unless you bought a very cheap price or very low price and you have permanent upside on it, then yes. So which we experienced before. I would believe that was the glove times that we have, right? So you only see uptrend on the shares, then why you bothered to sell it now, right? So that could happen. Then next thing is before expiry, right? Warrant price will move according to not just the underlying share price, also the time to maturity, expected volatility. That's the implied wall that you always see. And to a lesser extent, to dividends and interest rate. Okay, so these are the factors that we have ran through just now. Then there are also another factor, foreign exchange risk. If you are buying or trading structured warrants that are issued on foreign underlying, that means foreign shares and the foreign indices. I think the popular ones are Hong Kong shares and also Hong Kong indexes or some Hong Kong indices as well. So those you are exposed to foreign exchange risk. Okay. Next one or last one is credit risk. This is mainly the issuer that you are dealing with. They have obligation to deliver you cash, right? That's the credit risk we are referring to. Okay, which warrant you should trade or who should you trade with? We definitely suggest you to trade with mBank. We always aim to provide the most competitive pricing. We provide consistent market making as well to allow you to enter and get out, exit your positions anytime during the trading hours. Okay, we always be glad to hear from you. You can call us at this 0320598698. This is not a general line. This is actually our derivative team line. It's a direct line to our equity derivative team. Okay. If you see something abnormal in the market, you can call us as well for our warrants. Okay, what I meant is our warrants. Separately, I didn't put it here. You can also email us ed. I'll put it in the chat group later. ed-as@mbankgroup.com. In the case that you actually want an updated price metrics, we can email that. Right. I think my slides end here. I think I can pass it back to Shane.
All right, thank you so much, Xuan Teng, for doing this presentation. I think now we all have learned the essentials in trading structured warrants and how do we pick the right structured warrants to meet our trading objective. So if you have any questions for any of our speakers today, whether it is Jesse or whether it's Xuan Teng, you may write them in the Q&A box here. All right, so we can address them accordingly. Write them in the Q&A box, not the chat box, so we can easily manage it. We have about 15 more minutes for question and answer. For those of you who want to open a trading account, I think Jesse has left 4 contact numbers for you to contact the sales dealers who are respectively Ian, Nasir, Colleen, and also Jesse. Right, you may contact them for trading account opening. Yeah, I think thank you, Xuan Teng, for sharing the email. Okay. And also the price matrix page. Thank you so much. I see that Hong Tong like to ask this question. So how do we identify uptrend or downtrend of Hang Seng Index? Maybe Xuan Teng, you want to take this question?
I wish I can answer for this. I'm not a market research or market outlook. I cannot help you on this one.
Okay. I think you know, to identify uptrend or downtrend, if they are the straightforward answer is that if they are higher highs and higher lows, there's an uptrend. Now, if they are lower low and low high, there's a downtrend. Okay, just look at the Hang Seng Index. Okay, that is a technical answer to this question. But do you have any structural warrants on Hang Seng Index, if I may ask?
Currently, we don't have yet. We aim to issue structural warrants on KLCI first this year. Hopefully, target in September time.
All right. So let's wait for that. Then you'll be able to get, you know, Hong Kong exposure through locally listed warrants by M Equities. Can you comment on Gamuda C1E? That is by Jack.
1 minute, yeah. I need to see. Sorry, whose warrant is this? I don't think it's our warrants, you know.
Okay.
Yeah, I cannot comment on other people's warrants. Gamuda C1E. I would need to search up the information. Maybe I can get back to the person later.
Yeah, so not all warrants you see on the market is issued by, you know, M Investment Bank, you know, so I think you can address within the warrants that you issue.
Gamuda C1 is actually issued by CIMB.
Okay.
You might want to call CIMB.
All right. So contact CIMB Bank. All right. So that is not a warrant that belong to an issue by an investment bank. Chi Guan would like to ask, are you able to flash up the slide again that show the up and down effect that affect the warrant prices?
Oh, okay. Okay, I can just screenshot and then share it to you, probably in this case. Or you have questions. It depends on how you want it.
Maybe you can flash out the slide and then you explain again.
Okay, I was too fast, is it? Just a minute, yeah.
Yeah, if you have any question, write them in full sentences, yeah, so that we can understand your question.
It's on the screen now.
Okay, so the key factors that affect the structured warrant prices are the underlying mother share price, the time to maturity, the implied volatility, the interest rate, and the dividend yield. Correct.
Yep.
Yeah, I think this is a very important slide. I think when I was studying financial modeling, I also learned about all these factors. So
yeah, financial modeling.
These are Greek symbols. Yeah, I learned about Black-Scholes model when I was in school.
That's how we price our warrants, okay?
Yeah. Unfortunately, I was not headhunted by any bank to head this division. So no choice.
Okay, that sounds right now.
All right. So the next question by Lian Huat is that, is it in a market bullish environment, any call warrant will make money?
No, it's not any call warrants. Because it depends on the strike price, right? Then only it makes sense to you. Whether or not it's in the money. At the end of the day, you want to get intrinsic value out of it. If it's out of the money, even the share price goes high, you are still out of the money, right? In some cases. So you need to watch out the strike price. Then the next question is, how and when the strike price applied? It applied throughout the tenure because moneyness, right? As we have been talking about moneyness, strike price is the one that you will be able to see whether or not your warrant that you bought is in the money or out of the money, or is there any intrinsic value that you possibly will get at the maturity. Okay.
All right. So the next question by Desmond Chong is that on mBank issued structured warrants, are we trading with other investors on the market or we are trading with you only?
You have us, the issuer, we are always there. Then on top of that, there are investors. There are always investors queuing to sell their warrants or wanted to buy the warrants at a lower price, right? Something out of the ordinary, right? Usually it's not us, okay? Because if our warrant price is, you can see just now, I think I do show the slides, right? Hang on a second. I do show the slide, a certain, I think certain quantity of bid price or ask price, right? So there's always a symmetric kind of manners one. Anything that is out of ordinary, it would not be us. It will actually be the investor. some investors that will actually queue at the lower price than us. Okay, because they wanted to buy at the lower price instead of what we actually put up. Okay, so not only us, definitely.
All right, thank you so much, Shinteng. The next question is by Andrew Seal. Do market makers conserve their warrants when they are low? Do market makers follow any criteria when they are providing liquidity?
Yes, market making, there is rules and regulations. I don't have it in front of me, but Bursa actually imposed the rules for market makers, like what are the minimum bid and ask in terms of price and quantity. So we need to follow, not they, actually all of us need to follow when we are being a market maker. Else, Bursa actually will come after us for information. Okay.
So do you conserve your inventory when they are lower?
Okay, when we know our inventory are lows, right? We will actually process on getting more, we call further issuance. That means we increase the inventory to ensure that we are not at the low inventory space and allows us to buy or sell at the same time. Because you will be wondering, if our inventory is low, right? Let's say, that means we don't have much we sold out already. Then you see, when we sold out all the, let's say 18 million of warrants, we sold it out. It's all holding by the investor already. I'm not sure if you will like it, okay? That means we are no longer selling. We can only buy back, right? And the one that is selling is not us already. It might be the investor. Here comes the investor will come and then they start selling to you if you're willing to buy from them. And it's definitely not going to be us if it's sold out. But most of the time, we will further issue immediately. If you experience before, we have my EG. We further issued 2 times in a row for the same warrants because we know that we are closing to out of the inventory. Then we will start getting a new issuance on top of it, so that we know we're not going to go at low inventory moments. I hope that answers your questions. That's actually a very good question.
Yeah. Andrew asked a very good question.
Thank you, Andrew.
All right, I think that addressed his question.
All right.
The next question is by Izzat Aziza. In the money and out of money is ranging from exercise price or underlying share price?
I'm confused with the question.
Maybe you explain in what circumstances will it be in the money and out of money? I think.
Okay, we go back to this slide, yeah. It's only in the money when the share price is same as your exercise price. This case is exercise price is 1.6. The share price is now at 1.6. Then you are at the money. Anything above 1.6, you are in the money because you have an intrinsic value. If you remember how to calculate the intrinsic value, that is that is your share price minus the exercise price. So that will definitely give you an intrinsic value already. So anything above 1.6, you are in the money. Okay, share price movement decide whether or not your warrant is out of the money or in the money. I hope I managed to clarify this. If you cannot get the, if you don't understand why it does, never mind one. You can give us a call at the general line. To get someone, not general line, sorry, our direct line. Someone can explain to you definitely.
Yep. So feel free to contact mBank if you need any guidance in trading warrants. Yeah. I think this question is pretty relevant, and I also want to understand from your perspective. Okay, when will retail investors like us be allowed to sell warrants like in the US market? Because in US market we can not short, we can sell options, right? We can sell options to collect premium. But in Malaysian market, only warrant sellers can sell. You know, only issuers like you can sell warrants, right? Any perspective in that? Because I've also sold warrant before in the US market. I sold options before in the US market.
That was listed options. Okay. I think listed options is not something straightforward. I think this one, right, have to ask Bursa. Because this is more for Bursa to answer whether or not they can let us even they can even do this, because the provider, right, would be actually Bursa side, the exchange. They list out the warrants without inventory one.
Okay.
So it's the listed options.
It's a listed option. So the product should be issued by the exchange, not the issuers.
Go after the exchange.
Okay. So I will have to ask Bursa next time I meet them.
You
Huh?
It will take a while. It will take a while.
I understand that Bursa have an option, but it's under derivative market, right? OKLI.
Only for the futures purpose.
Yeah.
So it's very different. It's very different.
Yeah.
Option one actually work very similarly to call warrants and put warrants. Just
Okay.
like very clearly, call warrants and put warrants is issued by the banks, right? Options is not issued by the banks.
Yep. So now options are issued by the exchange. The next question by Pua is that if the warrant is in the money and it expired, okay, so it expired in the money. So how long will it take for issuers to do the settlement?
I cannot comment on other issuer, but
for mBank
is for mBank, right? You will get your cash, so-called cash, in your e-dividend account if you have an e-dividend. I believe most of our clients do have e-dividend account already. Within 7 days from the maturity. That means 7 days from the maturity, I would say that you should see that cash flow in. Okay. For those that do not have an e-dividend account, you will receive check. Then you see, we issued check on the 7 market day after the expiry. It will take some days to post to you as well. So it depends on if you're getting a check or you're getting an e-dividend account in cash.
Thank you for addressing the question. The next question is, what are the differences between call warrants and options in America?
Just now we answered already.
Yeah.
Call warrants is issued by us, banks. Okay. Listed option is not issued by banks.
All right. The next question is, are there any cases that we can't sell off the warrants after we bought them? And if that happened, what will happen?
Is there any cases that we can't sell off the warrants?
I would believe you can definitely sell them, right? Because they are market makers in the market. They can buy from you.
Yeah, it's just that are you willing to sell it? Are you willing to sell it back to us at that price? And yes, I think possibly if you're referring to my price metrics just now, there's one warrant is way out of the money. There's no value anymore because it's very close to the maturity, right? I think August 22nd. So there's no value at all. And the share price is half of the exercise price. Then you will not be able to buy back. We are not even able to quote you based on the pricings. There's no price for that warrant.
Okay. The next question is, if you hold the structured warrants to expiry, what will happen?
Sorry, again, the question is,
if you hold a call warrant to expiry, if you hold warrants to expiry, what will happen?
If it's in the money, you get cash settled. If it's out of the money, there's no value to the warrants that you are holding.
Yeah. So if it's out of money, then you get nothing if you hold on that expiry. If it's in the money, then you get the settlement on the 7th market day.
Yep.
That's what I learned from Sun Ting. What is the suitable warrants to buy with how long the expiry months? Yeah. So that is the question by Hong Tong.
It depends on when you pick the underlying, what is your expectations? Is it going to be 2 months the target price? That must be a target price that you're going to set, right? And then usually anything beyond 2 months period, you can buy and hold until the 2 months, right? Because you don't want to deal with the time value that is going to turn zero.
All right. I think it is time for us to wrap up the session. Let's do one last question. I think maybe you need to explain this, okay? Do we trade call and put warrants at high volumes and low spread?
I'm trying to understand the question in the first place.
Yeah. I think if I think volume doesn't equal to liquidity. Okay, that's something to clarify here, right? So, Teng?
Possible we trade call and put at high volumes and low spread.
I mean, do we prioritize, you know, if we were to pick warrants, right? There are a long list of warrants that are on the exchange. So should we pick the warrant with highest volume and tighter spread?
Okay.
I think that's how I understand the question.
Hopefully that's the question, okay? Okay. That means you are not trading with your own view. You are trading based on everybody going for that warrant. Okay. If you have a group of people that actually have a view and going for that warrant, I would think that you believe that person or that group of people, right? So that really depends on whether or not you want to take it. That's a risk there, right? You want to put your belief into other people's hand here, or you trust yourself better, check whether or not the warrant or the underlying share is something that you believe in. I think that would be better. And low spread, I doubt there is a lower spread. Is when people buying more, then we are just continually selling at the same price, or it will actually be a higher price, right? Because you're pushing up the share price already.
All right. So looks like we have addressed most of the question, if not all. So are there any concluding remarks from our speakers today, Xuân Teng and Jessie?
I think Jessie is going to hold a few workshops. So if you're not yet a M equities client, should definitely open the account, right? Then only you can attend the workshop. And we will also hold a few more warrant workshop in more details ones, like small ones, so that we can have more discussion instead of a big group. And that's our target with the marketing teams as well. So Jessie, I pass it back to you. You are muted.
Hi, yeah. Coming forward, we'll have a few of a workshop. So if you're interested, then you may reach out us, then register to request to have a reserve a seat. Yeah. So thank you for tonight attending.
All right, thank you. I just want to clarify that whether you are M equities client or not, you still can trade warrants issued by M equities. Okay, don't worry. But if the icing on the cake, if you become M equities client, then they have a lot of benefits to offer to you lah. So if you want to join, open a M equities account, then quickly contact the dealers, the numbers and the contact details that's given here to you on the chat group. All right. So thank you so much to both our presenters today, Miss Jessie Ng and Miss Xuân Teng. Thank you so much for joining us today to talk about structured warrants, power of leveraging. So I hope all of you here has gained enormous value from this webinar. So I wish I have to bid you farewell now. So may you all enjoy the great rest of the day. Bye-bye.
Thank you. Bye.
Bye, everyone.